Hi there, back again here with me Rati in Mami Beluga Investing. This video is a part of Singapore Straits Times Index where I discuss STI constituent. Today I'm going to discuss ComfortDelgro with stock symbol C52. My quick take for this company is that it is a growth and transformative company, so I'm interested in making some positions in this company. It is highly impacted by COVID-19 pandemic, unfortunately, so it may be a good part of one's portfolio when the situation gets better. Price-wise, it is not traded at a discount rate at the moment, but it is not too expensive either. So how did I come up with this conclusion? Stay tuned. Don't forget to subscribe to get more of this kind of content. Disclaimer, this is an amateur video. My main intention is to record my own journey learning and practicing investing from scratch. This video shouldn't replace any financial advice and neither suggestion to take up position, buy and sell in the stock market. Please conduct your own research before making any decision. Finally, feel free to put your comments, criticism and suggestions in the comment section. Okay, that's a disclaimer. Now let's have a look at the company's profile. I've known ComfortDelgro as a taxi company in Singapore. Less that I know that it has multiple lines of business all over the world. One thing that interests me the most in its taxi line is that it had faced some fierce competitions and some unfavorable situations over the last decade, starting from the emergence of various ride-sharing and the current pandemic-related travel restrictions. The group was formed on the 29th of March 2003 through the merger of two land transport companies, Comfort Group and Delgro Corporation. Both had started out in the 1970s, and had, by the time of the merger, grown to become successful listed land transport companies. The T and D in the name act as a ligature of shared letter, seamlessly joining the two companies. The final O, with its graphic accent, reinforces the company's core business of transport, moving people in Singapore and around the world. I might be rather ignorant prior to making this video. I didn't realize how big ComfortDelgro is. It turned out that it's pretty big. On the screen, we can see ComfortDelgro's global footprint. It is present in 7 countries: United Kingdom, Ireland, Malaysia, China, Vietnam, Australia, and of course, Singapore. 67 locations in those countries, more than 40,000 vehicles, and more than 23,000 employees. In Singapore, ComfortDelgro's business covers scheduled bus and unscheduled bus, rail, taxi, car rental and private hire, engineering, fuel sale and electric charging, driver education, vehicle testing, technical testing, vehicle and outdoor advertising, and insurance broking. In Singapore, ComfortDelgro holds 75% share of SBS Transit Limited. This is also a surprise for me because I was so ignorant before. Okay, this is another fact that I'm totally unaware, as I mentioned before. A few future developments that get me excited with ComfortDelgro are: in Singapore, it's currently phasing out their diesel taxis and replace it with hybrids. I hope it will go to fully EV or electric vehicles soon. The company currently runs 20 electric and 25 hybrids buses out of 5,800 public buses in Singapore. So it's less than 0.5%. It's small, but it's starting to go to a good direction, I think. ComfortDelgro also plans to participate in government call for public charging tender. Okay, now let's move on to United Kingdom. In United Kingdom, ComfortDelgro operates scheduled bus, coach, taxi, circuit and private hire. From my understanding, circuit means a route that can be serviced by more than one mode of transport. Okay, let me know in the comment section whether my understanding is correct. I might be rather ignorant of the terms of transportation in UK. Okay, in UK, ComfortDelgro operates Metro Line, which was the first bus operator in London to trial 5 BYD electric double-deck buses on Route 98 from its Wildstein, okay, hope I pronounce it correctly, Wildstein garage. The bus is able to travel 306 kilometers on a single charge and ferries up to 81 passengers at any one time. Okay, now in Australia. ComfortDelgro's Australian operations comprises mainly well-structured bus, business and taxi. They are scheduled and unscheduled bus, non-emergency patient transport services, taxi circuit, and vehicle advertising. In Republic of China, the business covers taxi, bus station, driving school, and car rental. A better electrification figure is happening in China at the moment, where it operates 946 EV taxi, taxi, out of 9,391 taxi fleet, so about 10%. I hope it will increase soon. So I'm quite excited in this electrification. Okay, finally, ASEAN, Malaysia and Vietnam. Okay, it is noted the operation at these two countries are very challenging with poor results. So it's quite likely that ComfortDelgro will exit these two countries. Okay, the company share ownership is not that transparent, at least from what I can access at the moment, publicly available information. The top 20 shareholders are behind some custodian accounts, as we can see. Okay, okay, now that was a brief company's profile. Now let's take a look at the company's performance. Okay, to see the company's performance, here I plot earning per share over the last 18 years. This is a lot of data to compile for me. Okay, in my opinion, ComfortDelgro is a growth company where it shows healthy growth for almost 2 decades. There are two notable dips in its earnings that coincide with two crises. One is in 2008 and the other one is, okay, as we all guess, 2020 of the COVID pandemic year. The 2020 dip was really bad. There was a gradual increase in earning from decrease in earning from 2016 to 2019. It coincided with competition from new entrants in ride-hailing players such as Uber, Grab, and Gojek. And as we know, Uber has exited Singapore market at the moment. Another contributing factor noted was also the protracted Brexit situation and the US-China trade wars. A huge impact of the pandemic is felt by the rail and taxi part of the business. With the travel restriction in Singapore and other places around the world, ridership have been dropped significantly. Taxi recorded a loss for the 2020. Earning during pandemic was helped by Singapore government grants and Australia operation. Without the government grant, ComfortDelgro noted it would record a loss. That will be the first loss over around 2 decades. Australian operation, where despite the unfortunate bushfires and pandemic crisis, was the best performing overseas location in 2020. Okay, so that was the earnings of ComfortDelgro. Now let's take a look at what other perks that a shareholder can enjoy. Let's look at ComfortDelgro's dividend. Okay, to look at the shareholders perks, here I plot 2 layers of information. The first one is the dividend payout for the last 19 years, which I plotted as red dots connected by a thick red line. I've annotated each dot with two numbers. The one on top is the dividend per share in Singapore dollars, and the one below is the payout ratio in percentage. So payout ratio tells us how much of the company's earnings are distributed to the shareholders. For comparison, I've also included the earning per share, and I plotted them in the background with small black dots connected by a thinner red line. There is a period where ComfortDelgro distributed huge dividends, that is, between 2004 to 2007. It distributed almost all of its earnings as dividend. In 2004 and 2005, it even paid dividend more than its earnings. From 2008, the situation seems to be getting better. It cut down the dividend payout a lot to much more reasonable figures. From 2008, also that the company entered the growth phase till 2016. 2016. Over that period of time, the dividend distribution have been increased. It seemed to me it increased faster than its earnings. We can see that the payout ratio increased from around 45% in 2008 to around 73% in 2016. It stayed then above 70% till 2019. Even though the company's performance was impacted by a lot, by the pandemic, as we know how the earning decreased, it still distributed dividend in 2020. In the 2020 annual report, it was mentioned that the company only take their profit into account in calculating the dividend payout. So no government money was distributed as bonus and dividend. I kind of like this attitude and prudence. Okay, so that was the company's performance. Now let's take a look at how the market valued the company. To see the market valuation of the company, here I plot 4 layers of information. The first one is the price, which is the easiest information to find. Here I plotted its price movement for over 17 years, since 2004, as a blue line. The second one is 10 times earnings. Here I plotted as a dashed green line. The third one is 15 times earning multiply in yellow. And finally, the fourth one is 20 times earning multiply in red. Okay, now let's talk about this graph. Okay, to make the discussion easier, I'll split the time period into 4. The first one I call the value period. That is the time period from 2004 to 2010. The second one, the growth period between 2010 to 2016. The third period is the competition period. That is between 2016 to 2019. And finally, the fourth one is the crisis period, which is after 2020. Okay, let's get back to the value period. In this period, the company is growing well, and the market valued the company fairly as mature and stable company. I can see that the price is stable within 10 times earning multiply, or PE10. A drop in earnings from 2008 to 2010 was responded by a decrease in stock price. Then, now let's move on to the growth periods, where the earning increased steadily between 2010 to 2016. Yet the market didn't realize yet, since the price still hovered around PE10. From 2012 to 2016, the market seems to become aware of the growth of the company, that it responded with appreciation of the stock. So the market became quite confident in betting on the future growth of this company. Seems like it. The stock price passed through PE 15 and finally almost reached PE 20 in late 2015 to early 2016. During this stiff competition, in the next phase or next period, which is the competition period from 2016 to 2019, the price have been bouncing back between PE 20 and PE 10. As we can see that there is a resistance to PE 20 happened in 2015 and at the end of 2020. Okay, finally, this is the crisis period. During crisis, ComfortDelgro earnings have been greatly impacted, but it seemed that the market still believed that the company is going to recover. It didn't respond with massive sell-off. That's interesting. Going forward, considering the huge drop in its earnings, it won't be surprising that the market might follow. But this is an extraordinary time. COVID-19 situation is extraordinary. So my hunch is that the price will hover around 1 to 1.2 dollars per share, Singapore dollars per share. And as of Friday, 21st of May 2021, when this video is prepared, C52 is traded at $1.62 per share. Okay, not that far. So let's wrap up. This is the end of this video. So in conclusion, ComfortDelgro, in my opinion, is still a growth company. It will be a great company to own if it can survive the current crisis. That's the problem, because we don't really know how this crisis will go from here. Okay, the reason why it will be a great company if it can survive the current crisis, that it is willingness to transform for electrification and its prudent management. Okay, that was my analysis of ComfortDelgro Limited. I hope my analysis is useful, and I'll see you again in the next videos. Bye.